Today, we are putting all of our focus on a single stock that made, well, a truly historic move this week, ZETA Global. If you weren't watching the tape in real time, you really missed something. ZETA closes up nearly 9%. And then after the bell, it just rips another 10% higher.
Pushing right toward that $24 mark.
A massive, just vertical jump. It completely redefined the company's valuation in a matter of hours.
Yeah, and that kind of immediate, almost violent market reaction tells you this wasn't just some small news item. This was a single, huge event. We're calling it the OpenAI catalyst.
So the market didn't just react it. It fundamentally reevaluated ZETA's entire business.
In an evening, yeah.
So our mission today is to give you the shortcut to understanding that re-rating. We've gone through the analyst reports, the financials, all of it, and we're going to break down the three core drivers here.
First, you've got this transformative Athena partnership.
Then the fundamentals.
Yeah.
The beat and raise financials that are underneath it all.
And finally, how the analysts are responding. They're rushing to upgrade their price targets, pushing them way past $30.
And the big question we need to answer for you is,
yeah.
Okay, the stock just went vertical. Is the opportunity still there? Or are we too late to the party?
Let's find out.
Okay, let's unpack this. Let's jump right into the news that changed everything for this company. ZETA's strategic partnership with OpenAI. And the sources are, they're unanimous on this. This isn't some minor feature integration.
No, that's the absolute key distinction. You see companies all the time saying they're using AI. It's become a buzzword.
Right.
But this partnership created something specific, Athena. ZETA is calling it their new super intelligent marketing agent. And the market seems to believe it.
What does Athena actually do that's so special? How does that justify a nearly 20% pop in a single day?
It automates the really complex, time-consuming stuff, customer acquisition, media strategy. Think about a huge company trying to launch a new product. They've got to analyze billions of data points, segment their audiences, test messaging, optimize the budget. It's a process that ties up entire human teams for weeks, sometimes months.
Right.
Athena does that in hours. It basically shifts ZETA from just being a provider of software tools to being the client's mission control for their marketing spend.
So it compresses weeks of human work into, an instant feedback loop?
Instantaneous, dynamic feedback loop, exactly.
That kind of speed is just staggering. But, we've seen this in the AI space. Tech can be copied. So what's the protection for ZETA? Where's the competitive advantage, the moat?
That's the billion-dollar question.
Because if anyone can just plug into OpenAI, why should ZETA win?
And that's the question that really dictates the long-term story for the stock. The moat isn't the model itself, it's the fuel. It's what ZETA is feeding into the model.
Okay.
ZETA is using their own proprietary data set to fuel OpenAI's engines. And we have to stop on this number for a second. Over 2.4 billion unique identities.
2.4 billion. That is just a staggering number. Why is that specific data so valuable in an AI context?
It's not just the sheer volume, it's the quality, the segmentation. In the world of large language models, anyone can access the general models, but they're only as good as the specialized data you train them on.
So garbage in, garbage out.
Precisely. And ZETA's data isn't just, scraped from the web. It's highly segmented, high-fidelity customer intent data. So Athena becomes smarter because it's learning from this unique protected pool of real-world buyer behavior that nobody else has.
So that data set is the firewall.
It's the firewall against competition, yeah.
So this isn't a software upgrade, it's a complete reframing of the business. We're moving from software as a service to specialized intelligence as a service.
That is the perfect way to put it. The strategic implication here is that ZETA goes from being seen as just another marketing software company, a sector that gets low multiples, to being a pure-play AI enterprise powerhouse. It just changes the whole narrative for Wall Street.
Here's where it gets really interesting. Because the analysis we're seeing is making a very strong comparison. They're calling this a potential Palantir moment for marketing tech. Why Palantir? That's a company you associate with, like government intelligence, mission-critical ops, not digital ads.
And that analogy is the absolute key to understanding the valuation shift. When an analyst brings up Palantir, they're signaling a shift from solving routine problems to solving mission-critical enterprise problems.
Okay.
And for a major corporation, managing a billion-dollar customer acquisition budget is mission-critical. It's about survival. So it implies ZETA's value won't just be measured on typical software PE ratios anymore.
It gets a premium.
It gets a premium valuation, one that's reserved for companies offering these unique, non-substitutable solutions.
Wow. Okay, that's an incredibly compelling narrative. But as we always say, hype alone doesn't sustain a move from $20 to $46. You have to look past the flashy AI story and check the engine.
You absolutely have to. We need to transition back to the fundamentals because the real stability here, the reason analysts are so comfortable raising their targets, is that this amazing AI story is built on a rock-solid financial foundation.
Right. ZETA is positioned as a reliable beat and raise machine. For anyone listening, can you just quickly explain why that phrase beat and raise is so powerful in the market right now?
In a market this volatile, investors are desperate for certainty. Beat and raise means the company is consistently exceeding Wall Street's estimates, and then, this is the crucial part, they raise their own future guidance.
So they're confident.
It signals incredible confidence, strong management, predictable growth. It basically tells the market, we know exactly what we're doing, and we're not worried about the macro environment. It's the ultimate sign of operational strength.
And the numbers, they really back that up. I mean, let's just look at the scale of this operation. Trailing 12 months revenue is sitting at $1.22 billion.
A huge number.
And they just raised their 2025 guidance to $1.27 billion.
And that scale is so important. This isn't some concept stock. It's a multi-billion-dollar revenue machine that's already growing at over 20%. This is what separates ZETA from so many of those other AI hype stocks.
The ones with great PowerPoints but no actual profit?
Exactly.
So we know they're high growth, but what about efficiency?
Yeah.
Because growth without cash, that's not sustainable.
What's fascinating here is that ZETA is already highly profitable, and they're generating significant cash flow. We're talking about $140 million in free cash flow.
So they're printing cash while they grow?
They are printing cash, and that means they can self-fund this AI transformation. They're not reliant on capital markets. They're not selling off equity. It de-risks the whole thesis.
Okay, let me play devil's advocate for a second. $140 million in free cash flow is strong, but you look at giants like Microsoft or Google spending billions on AI infrastructure. Is that really enough to compete and keep that Athena edge long term?
That's a great challenge. And the analysis suggests that ZETA doesn't have to compete on infrastructure spend. They're leveraging the massive investment OpenAI has already made.
Ah, okay.
ZETA's cash is for development, for integration, and most importantly, for protecting that proprietary data moat we talked about. They're competing on specialized intelligence, not general compute power. And you can see it in their margins, a 61% gross margin.
Which is very healthy.
It's very healthy. It tells you the platform is efficient
Yep.
and the service is high value.
So if we pull this all together, the fundamental thesis is ZETA offers that rare combination Wall Street loves right now. High growth over 20% paired with high efficiency. And that delivers certainty.
And that certainty plus the growth narrative,
Yeah.
that's the recipe for multiple expansion.
Multiple expansion. Okay, that's a key piece of jargon. Let's define that clearly, because that's what separates a stock going from 20 to 30 versus 30 to 46. What does that mean here?
But simply, it just means the market is willing to pay more for each dollar of ZETA's earnings than it was before. If they were trading at, say, 15 times earnings as a generic ad tech stock,
Right.
the market is now saying, wait, this is an AI powerhouse with proprietary data. We'll pay 20 or 25 times earnings for that. The multiple expands because the quality of the revenue has fundamentally improved.
That makes perfect sense. The fundamentals are the floor. The narrative raises the ceiling. Okay, let's shift to the chart. Because the way the market processed this news, it was just remarkable. This wasn't a slow upward drift.
Not at all. You saw the previous close at $21.67. And then after hours, it's pushing $24.
Yeah.
That is the physical manifestation of the multiple expanding right there on the screen.
From a technical analyst's point of view, what's so significant about that move? Why isn't this just another volatile blip on the radar?
Because the stock had been stuck. It was trading in this multi-month consolidation range, mostly between $18 and $20. 20 was the ceiling. When you see a stock break a long-established ceiling like that, punching through 21 so decisively on huge volume with a massive news catalyst, it usually signals the start of a sustained new trend. The market is confirming that the old valuation is it's invalid now.
It's the convergence of all three forces: financial strength, a technical breakout, and that narrative catalyst. So how are analysts pulling this all together into new price targets?
They're moving incredibly fast. The consensus target is quickly shifting up into that $27 to $30 range.
So that's the new baseline.
That's the new baseline. It confirms the expectation that the stock will hold these new levels and grind higher, supported by that predictable beat and raise cycle. $30 is now seen as the conservative, financially justified target.
But the sources also highlight a much more aggressive scenario, right? The blue sky potential target. What's the most bullish case out there?
That would be the street high target of $46. And hitting 46, I mean, that would be 100% gain from the recent lows before this all happened. That target signals the true disruptive potential that some analysts see if this Athena agent really gets widespread adoption and just fundamentally disrupts the big incumbent marketing players.
But getting to $46, That requires near-perfect execution. What has to go right for that to happen? What are those analysts betting on?
They're betting on three things, really. First, Athena has to work flawlessly. It has to deliver those productivity gains. Second, the free cash flow has to keep growing substantially. And third, they're betting the market keeps applying that premium AI multiple, all driven by the defensibility of that 2.4 billion identity dataset.
So if the Palantir analogy holds...
If the Palantir analogy holds, the stock gets priced on its disruptive tech, not just standard metrics.
So what does this all mean? Let's wrap this up with the final verdict from the source material.
I think the main verdict is that the market was fundamentally sleeping on ZETA. They were just treating it like a, quote, legacy ad tech stock.
And explain that designation one last time.
Yeah.
Why is ad tech sort of a negative label right now?
It implies a low multiple, because that space often relies on commoditized third-party data. It makes companies easily replaceable. If you look like everybody else, the market's not going to pay a premium for you.
So ZETA had the growth and the profit, but they didn't have the story.
They didn't have the narrative to justify that premium multiple, and this OpenAI partnership provides that essential narrative. It combines perfectly with the existing growth and cash flow. It's narrative meeting reality.
So the immediate takeaway from the analysis is pretty clear. The road to that consensus target of $30 is seen as paved, really, by this catalyst.
Right, and this is important for you to hear. The analysts are framing any dip after this initial run-up as a buying opportunity. They're confirming that this breakout has established a strong new valuation floor.
This has been a fascinating deep dive. A look at how specialized data, combined with a disruptive AI partnership, can just instantly recategorize a company for investors. Yeah. But we always like to leave you with a final thought to mull over.
Yeah, so we focused a lot on Athena. And that blue sky target of $46 really depends on its continued dominance. But we also said that its engine is fueled by that massive data set, 2.4 billion unique identities.
On moat.
The moat. So here's the thought. As large language models themselves become more commoditized, which they will, what is the actual long-term value of those 2.4 billion unique, high-quality, segmented identities? Is that data the true, hidden, sustainable catalyst? Does it ensure Athena stays superior to every other marketing agent no matter what new models are released? If that data is truly non-replicable, it could justify a massive long-term premium valuation. Not just the path to 30, but the whole journey to 46 and beyond.
A profound thought. Is the data the ultimate defense in the AI economy? We'll leave you to chew on that one. Thanks for diving deep with us today.